So by all accounts, it appears that the market bulls are back. The question we ask, though, is should they be? Dan, I'll go to you first.
Yeah, I'd say the jury's still out. I mean, we're 2.5 weeks into the new year, and I said this to you guys earlier, 6 months ago, you could have thrown a dart at your FactSet screen. I have about 200, 300 tickers up there, and it would have landed on a stock that's down 20, 30% plus on the year. Right now, you could almost do the exact opposite of that for being up on the year, 10, 20% or so. So to me, we've been doing this a long time here. I think that after a long period of underperformance, and especially in some of those areas that you just mentioned, some of those kind of once higher growth but higher valuation names, they've been correcting since mid-2021, right? So when you get to the end of 2022, that's about 18 months, right? That's a long period of time. And I think a lot of investors are looking for ways to play a little bit of catch up. The problem that you have right now is a lot of the names that are moving the most still are very expensive, right? With a lot of uncertainty about future earnings growth. And it's just not particularly sustainable here to have those sorts of moves this early in the year. So to me, I just wouldn't be chasing a lot of these names. I think a lot of it, though, does depend on your time horizon.
Leave the dart throwing to the professionals, by the way. It's a dangerous thing.
Especially when you're throwing at a screen and it bounces
who are the
back.
professionals?
Well, I use the suction cup darts on the screen.
Who are the professional dart guys?
Yeah. Okay.
I mean,
actually, there's a great video out now of some cat that needed to get like triple 15s and what. Sorry about that, Mel. Tim does a great job dissecting semis. Since you mentioned Nvidia, let's just talk about that specifically. Stock is still, despite the move of 70-ish% we've had since October lows, still down about 50% from its all-time high. It's rallied significantly, as you pointed out, from the 145 level recently. Trades at 15 times revenues-ish. Trades about 43 times next year's numbers-ish. In this environment, that is not a cheap stock at all. I think what people are trying to do is sort of game out the environment right now, and they're staying with stocks that are working to the upside until they don't. And I'll tell you, when Nvidia reports earnings, I think a month from now-ish, it's probably going to disappoint a lot of people. So you have to ask yourself, when do I pull the ripcord? In the case of Nvidia, quickly, 190 is where we broke down from significantly in August. That's probably where we get back up to.
Well, that's what's so curious about these runs. They're running right up into the earnings report, which we have been saying for a very long time. Expect some, bumpiness when it comes to earnings season because of the guidance that we could be getting from these companies.
Right. Well, just to Nvidia, I had a little position in Nvidia and sold some today. I just feel like this has been such a big run up. I mean, to your point, it might trade higher, but I feel like it's down a lot and up a lot from the bottom, but it is still nowhere near cheap. So I don't know. You also don't want expectations to get higher and higher as you go into earnings season. So I don't know what to make of it. I think it's still pretty expensive.
Well, I'd say, NVIDIA, which is up 25% in 15, 8 sessions, semis are up 15% from that Dec 28 number. But, last week, Taiwan Semi kind of de-risked 2023 for semis. I mean, they pretty much let you know that things are, they've cleaned up the inventory. They've given you some guide, and they've kind of said 24 could get very interesting. And that's a stock that rallied, 11 or 12% last week and has kind of added to that. It was up another 2.5% today. So I've talked about semis a lot. I'll just say, getting back to a conversation that is the Fed certainly is not going to be as aggressive in the next 3 to 6 months as they were. But people don't understand how tight this labor market is and how much I think this is going to weigh on the Fed moving for longer. So I get the fact that inflation in terms of goods is down. I get the fact that those year-over-year comps look pretty good. I think what people are underestimating is the length of how long the Fed needs to stay higher and how shallow, even if it's a shallow recession, the growth could be coming out of that.